Very good morning to all my dear students. Now it is the virtually the class is being recorded. So let me take you all through this departmental accounting. Before that, let me introduce myself. This is Suresh Babu MG, Assistant Professor, Department of Commerce, as you all know, Government First Grade College, Gauribidanur. Okay. As the new initiative in this particular academic year, I am recording virtually this particular class for could be a couple of minutes. So as we have discussed earlier, the meaning, even the objectives and the scope of departmental accounting, it is very important for all of you to learn how to prepare and ascertain the profit and loss account of each department and to prepare the balance sheet, because end of the year you would want to know the each and every department's performance. So appraisal is very much required. So hence in the so you need to follow the 5 important steps as the display is being showing to you. The following are the steps involved in preparation of final accounts of departmental undertaking is the heading. See the cursor movement, you could see and witness 5 of the important steps. First, the preparation of departmental trading account. The second step is preparation of departmental profit and loss account. And the third step is preparation of general profit and loss account. And the fourth step, the appropriation account in case of departmental undertaking is a corporate entity only. Then the fifth step, preparation of consolidated balance sheet. Suppose if it is a small trading concern, sole trading concern and a partnership firm, then you need not follow the fourth step. Okay. In case of companies only, profit and loss appropriation account is needed, which will be prepared column wise. Right? So in the first step C, I have already explained in the class, but let me explain once again the contents of the trading account. That is the first step. A step in the preparation of departmental final account. That is the preparation of the departmental trading account. As you know that opening stock is debited, purchases is debited, while debiting purchases less purchase returns of each department, and sales of each department is credited, and direct expenses like wages, carriage inwards, power, water, brokerage and commission on purchases, etc. of each department have to be shown in the respective department columns. So towards the end, closing stock of each department you would be showing on the credit side. So then you would balance debit side gross profit balancing figure and credit side if it is balance, it is the gross loss. You know it very well, right? Each department wise, column wise, if you see, you would be getting this information. So now it is very, very important. So the details regarding direct expenses may be available individually for each department, or the total amount of expenditure incurred without individual breakup may be available. What does it mean? Sometimes in the particular problem, they would give you department-wise direct expenses. In that case, in the respective department column, the amount would be recorded. Absolutely no issue at all. When, where the details of department-wise breakup of direct expenses are not available, they must be apportioned for each department on a suitable basis. The following table gives the basis for apportioning direct expenses among different departments. So that means if the basis is given, such basis to be followed for the apportionment of direct expenses. Right? If the basis is not given, then this basis we need to follow. For example, what item of direct expenditure basis of apportionment. You check it. Already, this notes I have sent you. Please read it once again. Freight charges and carriage charges. It is to be apportioned in the ratio of net purchases of each department. Then, import duty of Troy on purchases is to be apportioned ratio of net purchases of each department. Same, see, here also ratio of net purchases, here also net purchases ratio of each department. Then power charges, ratio of meter reading of each department, or ratio of floor space occupied by each department, which is practical, right? So you should see ratio of meter reading if each department is given in the sum, then power charges to be apportioned on that basis. Otherwise, floor space, if it is given of each department, in that ratio, power charges to be divided among all the departments. Then water charges, ratio of meter reading of each department. The second step, you know that the preparation of departmental profit and loss account. So you would be preparing like gross profit or gross loss of each department, with which you will be starting profit and loss account. Incomes of each department will be credited, and the indirect expenses of each department will be debited. If the basis is given, the same basis you will follow. If the basis is not given, then you are going to follow this C category, item of income, basis of apportionment. It is very, very significant. If you know this, then it would be easy for you to allocate expenses to each department and incomes of each department, whether direct or indirect. So first one, see, discount received. The cursor movement you have to observe. Ratio of net purchases of each department. Okay. That means when the discount is received, what does it mean? From the suppliers, creditors, okay, when you make the payment in advance, right, then they would allow you certain percentage of discount. Who allows? Suppliers. From the suppliers, what did you do? You have purchased the goods. So hence, ratio of net purchase of each department to be followed. Then commission earned on sales, okay. So this is ratio of net sales of each department. Net sales means gross sales minus sales returns. Then reserve for discount on creditors, ratio of net purchases. Okay. So you should be able to remember. Then if the problem specifies any particular basis for apportionment, the same must be adopted and not the basis stated in the above table. What does it mean? If basis is given in the sum, the same basis to be followed. If the basis is not given, instruction is not given as how to distribute the above expenditure, then this table you need to remember and incorporate it. Then items of indirect expenditure, right? Basis of apportionment. This is very, very important. So this is self-explanatory. So once you read, then you would be able to, let me explain. Discount allowed, selling commission, sales tax, carriage outwards, traveling salesman salary and commission, after sales service, advertisement. Till these, right? There is same ratio of net sales of each department. So department wise, you would prepare two ratios. One is net purchase ratio and the other one is net sales ratio. In the net sales ratio, discount allowed, selling commission, sales tax, carriage outwards, traveling salesman salary and commission, after sales service would be apportioned. Okay. Then advertisement, there is ratio of net sales or ratio of advertising space. Then bad debts, reserve for bad debts, right? Both will be apportioned using ratio of net sales, because sales increase means ultimately bad debts and reserve for bad debts also would increase. That's the reason. Then rent and rates, ratio of what? Floor space occupied by each department. Floor space means what? Area of built up area. Okay. If the area occupied by department, if it is more, the expenses also would be more. That's the reason why the ratio would be given. The floor space of each department, in that ratio, rent and taxes to be apportioned. Repairs and insurance of buildings, same ratio of floor space occupied by each department. Air conditioning, ratio of floor space occupied by each department. Electricity bills, remember this. So ratio of number of light points. Power is different. So power is a direct expenditure, and electricity for lighting is indirect expenditure. It is ratio of number of light points in each department, or ratio of floor space occupied by each department. Either of this is the basis. Depreciation on machinery, ratio of value of machinery, or ratio of floor space occupied. Remember this. Repairs of machinery, same ratio of value of machinery of each department. Insurance premium, ratio of value of subject matter insured. And workmen's compensation insurance, same ratio of wages to workers to each department. Canteen expenses, ratio of number of workers of each department. Recreation and labor expenses, ratio of number of workers in each department. So remember, this is very, very, very significant and very important. The third step is, there are certain items which are common to all the departments. So these expenses or incomes could not be distributed. Hence, after the preparation of trading account, profit and loss account, you need to prepare general profit and loss account. Okay. So in which, like, common incomes are not apportionable among departments include dividend received, transfer fees, interest on bank deposits. Then what would you do? In the general profit and loss account, this dividend received, interest received, transfer fees received is to be recorded on the credit side as it is income. Then common expenses also, okay, are not apportionable, hence to be recorded in general profit and loss account, like interest on capital, interest on debentures, general manager's salary, audit fees, director's fees, bank charges, legal charges, sundry office expenses, etc. What do you mean by this? These are common indirect expenses which cannot be apportioned to each department, because it is not department-wise expenditure, it is the unit-wise complete undertakings expenses. That is the reason why these expenses are recorded on the debit side of the general profit and loss account. Remember, very, very important. Okay, interest on capital, once again I am repeating, interest on debentures, general manager salary, audit fees, everything is printed over here. Please practice. It's very, very important. Then the fourth step, in case of company only, profit and loss appropriation account needed to be prepared. In the fifth step, you would be preparing the consolidated balance sheet. That is assets of the undertaking, liabilities of that undertaking, capitals of each and every department is being shown in the balance sheet format. It is consolidated together, integrated balance sheet is going to be prepared. So this is what the preparation which is very much required. You need to revise, remember, right, all the steps, then attend the regular classes, then do the sums, practice the sums. Thank you so much for viewing this particular class.